Good morning. How's everybody doing?
Great.
That sounded terrible. How's everybody doing?
Great.
That's good. I gotta say, you're much better looking than last year. So kudos to Startup Grind because it's getting better, right? So really excited for being here today and getting a chance to talk with these investors here, and hopefully we'll be able to dive into this idea of fundraising 101. I kind of feel like there might be a test later, right? But to set the stage a little bit, I'd love to just get a feel for the room. So how many founders do we have in here right now? Right? Okay, excellent. So of you guys, how many of you are kind of early stage, like seed stage? Seed, okay, good chunk of you. How about after that? Any, okay, little, maybe you're waiting on your term sheet right now. How about an A round or beyond? Okay, great. So that gives us a really good idea of the room. So why don't we just kind of do a quick introduction on what you guys do in your fund, and maybe a little bit about your thesis and stage and what stage you're at. So Julie, we'll start with you.
Sure. So I'm with Mosaic Ventures. We are an early stage fund based here in London, but we invest all over Europe. The fund itself is about $150 million, so we tend to play at the Series A stage. We're all based in London, but we kind of cover Europe overall. Most of our investments have been in the UK so far, a couple in Germany, a couple in France. And as the fund, I think we're pretty generalist, so we're open to tech, we're open to healthcare, we're just very much stage focused. I think the final thing to note about us that makes us pretty interesting compared to other European VCs is that we have very strong ties to the US. So half the investment team is American. A lot of our companies go on to raise from US investors as they think about expanding around the world, and that's something that we're happy to help them with.
Excellent, and I would love to come back to that because that's such an important point as we thinking about trying to scale up and gain customers. Ben.
Yeah, so no, I'm a managing partner at Draper Esprit. So we're a Series A and Series B investor based in London, but like Mosaic, we invest across Europe. Check size probably between sort of 5 and 25 million euros. We're pretty tech agnostic. We invest in technology, but we invest through semiconductors, infrastructure, enterprise, and consumer. So across the board of technology. And we're doing about 10 to 12 new deals a year.
Okay, great.
Jeff Kaliski, CEO of Cedars, equity crowdfunding. Actually, still feel like a startup. Got going in 2012. We actually help raise funds from actually seed stage through to A and B round, although as it gets later, we end up working very closely with VCs and other parts of the industry. Very big on helping founders reach out to their network, and actually we've recently built a secondary market to allow investors to participate either later or trade out. Which was a lot of fun. We operate largely in the UK, although 20% of our business was European last year, and actually we do take investment from about so far has been about 65 countries. So very early days, but last year we funded 167 businesses and about 77 million through the platform. So it's now a thing, which is pretty good.
It's good to be a thing. So let me key in on a phrase that you learned, just since we're talking about 101 here. What does the secondary market mean, and what would that mean for a crowd like this?
So it's a really good question because in this space particularly, what's great about this asset class, whether it's seed or early stage, is it is a long-term commitment. I mean, patient capital is a thing, and it does take time. I mean, when you get in, you need to be in for 8 to 10 years. And in that sense, whilst a lot of the people who play in this space understand that, as you broaden the net, actually, it does make sense to refresh the investor base as you get older. The needs are different, what you're looking for is different. So what a secondary market allows people to do is the ones who came in early, who made some early bets, allow them to step out, and some of the later stage people who actually understand what that means and are looking for maybe participating in something that they weren't prepared to take the risk early on can then come in. So it actually kind of keeps the investor base fresh. And in our world, that's really important because investors are ambassadors because there's sometimes hundreds or thousands of them.
Mm-hmm. Okay, well, that's an interesting point and maybe speaks to some of this evolution that we've seen over the past couple of years. Can you, I think y'all can hear me speak a little bit to, I guess, the evolution that you've seen in really this space, specifically in this market, and then maybe you guys can continue to comment on how that affects the continent and beyond.
Evolution in terms
how
of
you're sourcing deals and funding and things like that, right? Because we're hearing like thousands of investors, like that's a little bit foreign to me as somebody who founded a company in the early 2000s.
Yeah, for sure. So I think there's definitely just kind of been an uptick in the overall ecosystem, both in terms of investors, but in terms of number of companies founded. We actually just released a State of Seed report a couple days ago, kind of looking at the European ecosystem as a whole, and it's kind of not only somewhat easier to start a seed fund these days, but also that's in accordance with the explosion of companies that have come onto the scene. So we sit at the very interesting stage where there's this huge new influx of talent in the European ecosystem, and because there's this interest in tech, more and more companies are starting, more and more companies are getting funded, but then the funnel is still there for the A as they go further along and have to prove product market fit. So I think you see a huge explosion in growth on the early stage side. So with that comes the commensurate funding activity.
Right.
Yeah.
Ben, what do you think about that?
Yeah, I think that's really true. I mean, I think what's happened in the last 10 years is that, interestingly, entrepreneurs have massively upped their game in terms of the businesses that they're building. And actually, I'd like to think that venture capitalists have done the same thing, right? I think that companies, groups like what Jeff is doing with Seeders have really innovated at the early stage. I think Robin Klein was up here earlier. So what Saul and he did back in Seed Camp days 10 years ago. I mean, there's probably 3 accelerators in London. Now must be 130 plus. So I think the entrepreneurs have upped their game, but I think the investors have as well, and secondary is an important part of that. And in many ways, I think what we've been doing with Draper Esprit has been part of that as well. So we're certainly, we have a strategy where we are participating in the ecosystem generally, not just doing our little bit at the Series A and B, but trying to be much more holistic about how we think about driving great companies out of Europe.
So we've all kind of said this word ecosystem, and I mean, it's in my title, right? But like, what does that mean to you guys? Because I find that really an interesting word that's kind of, I want to say new, at least in the past decade. So from Oracle's perspective, we're one of the few, I guess, corporates that we don't make an investment. So when you come into our accelerator, our objective is to help mentor you and grow you and give you technology and really accelerate your revenue growth through exposure to our customer base, for example. So to us, that's what an ecosystem is not just the funding part. Can you guys each comment on kind of what does that ecosystem mean and how is that valuable, and maybe even how do you partner in that?
Sure. I mean, for us, I guess ecosystems has 2 dimensions from our role in it, I suppose. One is, we very much collaborate with other types of funding. So it's, I think there was a time that people would say, is it crowdfunding or VC, or is not? It's, it's and. It's very much partnering with multiple different types, angels as well. So the ecosystem is multiple different players from a funding standpoint, but our ecosystem goes beyond that in the sense that as you stretch more into the retail space and you step into kind of hundreds, thousands, that ecosystem are investors, but they're now vested in your business. So, we have a lot of seed companies, early stage, who actually activate that investor group to become ambassadors, to go out, to do things on their behalf, and they want to, they're bought into it. So it's a different type of audience now who's now participating in their success. And so ecosystem in that sense becomes very strong. The only, I think, third dimension is our approach is very much a life cycle approach. So post-funding, our relationship doesn't end. We're trying to build an alumni community where, companies like Oracle or others can participate and engage with this group to help them on their growth journey.
Julia, what's your take on this as well?
Yeah, so I think you can look at ecosystem in a number of different ways. Like the first dimension is of course other investors, other angels that you can work with, pre or post the stage that you're focused on. But then more broadly speaking, of course, you have to look at customers, you have to look at corporate partners. A lot of corporates are starting accelerators these days, or at least having programs through which they can mentor startups and then maybe become an eventual customer. So it's customers, it's partners, other investors, and then as you think more globally, the ecosystem kind of takes on a different lens, because if you're a company that's starting here in the UK and you want to start thinking about expanding in Germany, expanding in France, who are the best partners in the space overall to help you do that? Whether it's having another VC that knows the ecosystem better, finding the right launch partners to really fuel your business depending on what vertical you're in. So I think it's very dependent on geography and exactly what you're doing, but there are different kind of modules within each that you can trigger.
So I want to come back to this idea of ecosystem, because we've talked about how it kind of benefits. So just want to plant this in your mind just a little bit in a forward question, like what are some maybe roadblocks or some blockers, or these all sound like really, really good things, but sometimes partnerships can be a bad thing, right? Like when you're starting out, you want to partner with everybody you can and take whatever money you can. What are some bumps that you might tell people to look out for?
Well, it's not really a bump, but I think it's a blocker. And since we're talking about ecosystem and we're talking about funding, the VC landscape, right. I think one of the biggest blockers in Europe right now is the fact that when we get to an exit, for the most part, our only exit route is to sell our companies to a US acquirer, right? And that does not keep the talent and all the money in the system here. What the US have done incredibly well over the last 30, 40 years is they've built an awesome capital machine called NASDAQ, which basically allows you to do a secondary to get liquidity and then keep funding growth, acquisitions, get people an ability to liquidate their stock options, makes the money, right? And that keeps the money and the talent in the system. And I think what Europe needs to do is, frankly, see more of our companies go public and become the acquirers of the future, because I think that's really when we get to be grown up, right? And so I think that's a blocker. So I think what's happened in the last few years is that we've done a huge amount of work at the bottom end, at the early stage, at the mid stage, A round, B round. But unless we solve the problem at the top, i.e. where the exits are, we're sort of going around in circles a little bit.
What's keeping that from happening? Is it where the customers are? Is it a liquidity issue? Why is that not happening? Or what needs to happen for that to get better?
I just think I think we need better companies, but I think we are. I mean, generally speaking, look out there. There's some tremendously successful companies out there in the market now that are starting to think about it. I think it's also just a cultural, and it's just the ambition of the entrepreneur and their backers, right? Which is that they want to keep going. They don't want to sell to Cisco or Oracle or Amazon, but they want to keep going. And I think that's cultural, and I think that is something that just takes time to change.
So you talked about some change, I guess. When we think about investment, we often think default about equity. For X amount of dollars or euros, I have to give away a certain amount of my company. Over the past several years, you see interesting things like venture debt, and now we see this insurgence of an ICO, right? Like, can you comment on what are you seeing today, Jeff, on that, and maybe where do you think that's going?
Oh,
you've got 1 minute. No, I'm just kidding.
So the reason I think there's a lot of really good things happening in terms of the development of blockchain and kind of ICOs and tokens on top of that, and tokenizing certain businesses. I think we're in that slightly Wild West frothy period where there's going to be a lot of sort of people dead on the field before it kind of reaches the end. I think it's partly difficult because I grew up a nerd back in the 80s when it wasn't thing coding in the middle of the night. So there's part of this which is super exciting, but I guess it's the key thing for us is it going to become a thing? Yeah. I think there's going to be some movement of certain applications using blockchain technology. Is it going to become the thing? Does it destroy? I don't see that. I think the one piece of advice I would give is there are good ICOs out there. There are some people trying to do honest work around it, but I'll go as far to say as most are probably on the edge of this thing is probably not going to work. And I think just be intelligent, read the white paper. If it makes sense, then it'll make sense. If it's 80 million for this thing which isn't built yet, which may or may not tokenize something which you don't own the assets to, it's probably not a thing.
That's great. So it kind of reminds me of the first company I founded was in 1999, 2000, and so we had a kind of a big shift in those days where, I kind of joke, but you would write a business plan on the back of a napkin and get funding, and then the Wall Street had a bit of a shift, and so we went from, and then when I started, we were in that shift, right? So you actually had to have products that sold things, and you had to eat what you kill, before you would get some funding. So I'd love to hear from each one of you on a little bit of advice, because I was in that stage where we were in a shift, and boy, I could have loved to hear some great advice on walking through that shift to accomplish my initial 2 goals, which was build a product people want and make it good enough where somebody would give me some funding so I could accelerate that. So could each of you just spend a moment, I guess, giving some advice to, me today, who is just, because this is a group they're super early. So like, what would you do? What would you tell them to help advance their cause?
So I'd say for us, when we meet companies, what we say we're looking for is product market fit. And I realize that's quite a nebulous term, and it really depends on what vertical you're in, what your business model is. But usually that's some beginning of consistency in metrics, right? We've invested in traditional SaaS companies. We've invested in apps that are still pre-revenue to this day. So it's kind of having conviction that whatever you're doing, people are starting to take to it, and that you have a playbook that you can start to execute on, right? If it's a software company, it's you're starting to sell. This is the playbook for how you've sold. Here are the beginning metrics of typical LTV CAC and what you can begin to expect, and why customers are happy, and why we can believe that you would continue to do that with new customers. Versus if it's consumer, maybe you're not actually monetizing yet, but you have a goal for changing your user base into something that could be monetizable, or changing what you've built into a real fan base that could help you figure out a path to monetization.
Excellent.
I think for me, it's as an entrepreneur, you just got to really try and crystallize what KPIs, what proof points you're trying to get get you to the next stage of your business, right? And try and be true to those. The problem is you could develop those milestones that you want to capture, or the hurdles you want to get over, but the outside world is just like frothy and moving on, right? So, I think there's some numbers out the other day. There was 100 million, I think last year, 3.5 billion pounds of investment in tech in the UK last year. I may have the numbers slightly wrong, but the order of magnitude is this: 3.5 million last year. In 2010, 100 million. Right? If you were trying to raise a B round in 2010 in the UK in tech, you were toast. So that's unfortunately somewhat out of your control, I'd say. So I think as the entrepreneur, you got to, and so this is a frothy market right now. There's a lot of money in the market. Is it going to continue for the next couple of years? Let's hope so. But I think the thing that you, as the entrepreneur, need to stay true to is, where am I on my ladder? What do I need to do to get to the next rung of the ladder? And as I prove those steps out, am I making progress? And I think that's really where you have to keep yourself very clear and focused.
Sure.
I guess 2 things. On the funding side, I'd agree with that. I think the story needs to be clear. If you're early stage, you don't have enough proof points to say this is a thing. So the story needs to be very clear, and you need to have the, I guess, passion and clarity behind it. And the older you get, the more the proof points need to turn into traction. But I'll answer the second part, or I guess a different angle to your question, which I think is, of what I've seen from founders and small businesses and entrepreneurs, I guess there's 2 things. One is, what I find is actually you have more power than you think you do. The walls you hit the obstacles that get thrown up, the reasons why you think you're going to die tomorrow, you know what? 90% of it, there is a way through. And so, you know, as I use this example once in terms of when they say, like, when a plane crashes, it's usually pilot error. It's like, avoid pilot error, because actually you probably have more control than you think. I think the second thing is, almost every business which I talk to that runs into a challenge, it's a sales challenge. It's, how do I get through sales? And so if there's one advice I could give you, it's this. It's the best answer you can get is a yes. The second best is a no, because you can't do anything with a maybe. And the most often answer you get is maybe. I walked out of that meeting. It was a really good meeting. Always happens. If you don't get a yes, go for the no. That's when you know you understand the customer.
Wow, that's a great way to finish. So I just want to thank you all for coming out here, and thank you for listening to us. If you're interested in learning more about Oracle's program, you can go to oracle.com/startup and learn more. So thanks.
Thank you.